Tax hikes are coming, folks. Tax hikes are coming. These are the things that you need to be aware of in 2025. My name is Rob Gill, founder, CEO of Epic Financial Strategies. Take really good notes. You will walk away with more information than you had before. The Tax Cuts and Jobs Act, TCJA of 2017, which introduced significant tax reductions, is set to expire December 31st, 2025. This expiration is going to see several major changes revert to their pre-TCJA state unless Congress is going to act to extend them. Now, we know that tax laws changed at least 40, 50 times since the 60s, so we don't know if they're going to change or not change, but it's always important for you to be prepared and educated, but also surround yourself with the people that can implement what you want to do next. Now let's get into the major changes that you should expect to see. Let's start with individual income tax rates. The lowered tax rates will revert to higher pre-TCJA levels. This change will likely result in increased tax liabilities for many individuals. Very important to understand that. Standard deduction and personal exemptions. The nearly double standard deduction will be reduced roughly in half, okay, and the personal exemption was eliminated by the TCJA. It's going to return. It's going to come back like Freddy Krueger. Child tax credit. The expanded child tax credit is going to decrease, affecting many families' financial planning. Estate tax exemption. The exemption amount for estate taxes will be significantly lowered, prompting those affected to reconsider their estate planning strategies. Then we have the SALT deduction. The $10,000 cap on state and local tax, SALT, deductions is set to dissolve, which may benefit individuals in high tax states. Pass-through business deduction, the 20% deduction available to many pass-through businesses will expire, potentially increasing tax bills for many small business owners. The thing that stands out the most for me is the estate tax exemption, which is going to be lowered. And because some of you folks could be getting money from your parents as they shuffle off this mortal coil, that could increase your estate. So be aware of that, number one. And number two, if you want to learn more, go ahead, click that link below. Specific to this, if you want one of the experts here at Epic Financial Strategies to walk you through that process and hand you off directly to an accountant, feel free to do that. Don't forget to put the message below in the meantime. So these changes will collectively lead to higher tax bills for most Americans if the provisions are allowed to expire as planned. This scenario is likely to be a significant issue in fiscal policy discussions as the expiration date approaches. So folks, when I went from making 100 to 300 grand, it was, do a 401k and invest the difference. But when I went from 300 to $1 million, the 401k didn't work anymore. So now the strategy between tax mindset and being able to put more money in my pocket today, instead of being taxed, back into my business so it could keep growing, that's where it's important for you to understand what's about to happen, because you want to learn the strategies, not the write-offs, the strategies on how to elevate your money time freedom. So I'm going to get into who this is really going to affect the most, so pay close attention, take good notes, because it could be you. Who will be affected the most? High income earners. These taxpayers will likely see the most significant impact as they benefit disproportionately from the tax rate reductions and increases in deductions like the standard and SALT deductions. Families, the reduction in the child tax credit will impact many families, potentially increasing their tax burden. Small business owners, those benefiting from the pass-through deduction, may see a notable increase in their tax liabilities. Individuals with large estates, the reduction in the estate tax exemption could lead to higher estate taxes, that's what they want, affecting these individuals' estate planning strategies. The thing that stands out the most to me really is if you look at the child tax credit, if we know inflation is costing more with our gas and our food and we're not getting that child tax credit anymore, that's how it becomes a burden when you're used to being able to get that beautiful write-off that no longer exists. So you have to be understanding what's going on in your world right now, not just from an estate planning standpoint, but these little micro distinctions, including pass-throughs in businesses. As the expiration of the Tax Cuts and Jobs Act approaches, there are several strategies taxpayers can consider to prepare financially. Let's get into it. Potential strategies: Roth IRA conversion. For those anticipating higher tax rate post 2025, converting traditional IRA funds to a Roth IRA could be beneficial. This allows taxpayers to pay taxes at current lower rates before potential increases and withdrawals from the Roth IRAs in retirement are tax-free. Accelerate income. Individuals might consider accelerating income into the remaining years of lower tax rates. This could include selling assets that will realize a gain or asking for a bonus to be paid earlier than scheduled. Good luck with that. Deferred deductions. Conversely, it might be wise to defer deductions until after tax cuts expire. This could include postponing charitable donations absorb medical expenses that can be timed. Estate planning. With the estate tax exemption expected to decrease, reviewing and updating estate plans is crucial. Strategies like making gifts under the current higher exemption limits could be advantageous. Financial review. Conduct a thorough review of your financial plan with a tax professional or financial advisor to understand how the expiring provisions will specifically impact your finances and explore ways to mitigate increased tax liabilities. Whole life insurance policy. There it is, folks. You've been waiting for it. Open and overfund a whole life insurance policy in order to access your money cash-free and borrow from yourself to reinvest and hedge against inflation. As we just reviewed all the potential things that could happen post-2025, it's important that you get your free financial roadmap with one of the experts here at Epic Financial Strategies. Let me tell you, thank you so much for checking out the channel. Continue to do so, add comments, request videos, and continue to like, share, and subscribe.